you do even a cursory screening of companies of reasonable size, say 5 billion and above, large mid cap to large cap. That's our universe, if you will. If you and depending on where you are in the business cycle, but again, if you just go back over, say, any time period, whatever environment you're in, 5 to 6 years, and you look for companies that have compounded their earnings growth consistently, not necessarily lumpy, but 15+% a year, that list is not that large. So what we're looking for to discern good to great, if you will, or great from good rather, is ultimately its profitability. I stated earlier, if a company has significant competitive advantages, the key metric is cash, return on invested capital. We want to own companies that generate buckets of cash. And for a company to consistently do that, they're going to have to ward off all these competitive threats. Customers are a threat. Certainly customers want more from a company and pay less. Same with suppliers. On and on it goes. So when you find these businesses that have a long enough history of demonstrating that they can ward off the multitude of competitive pressures, and there's this great business franchise that's generating unlevered returns on invested capital of 20, 30, 40% or even higher, well, that's when our antenna perk up. Then we just have to wait for that valuation to come in, to pull the trigger. And so I also believe, going back to this idea of a structural advantage of focused investing, if we are truly interested or dedicated to finding these top-rate, best-of-breed businesses, our prospective list of companies isn't that large. There's only 4 of us at Wedgwood, and including the companies that we have in our portfolio, right now it's like 22. And on our short list, in any given time, it's maybe another 10 to 20 companies. So while we only have 4 people at Wedgwood doing this, our short list is only about 35 or 40 companies. It's not that many. That list doesn't change that often. And related to that, while we currently own about 20 or so stocks in our current portfolio, over the last 20 to 25 years, we've only owned a little more than 75 or 80 others. That's it. We swung the bat about 100 times in 25 years. I'm linking my previous firm, since over the course of Wedgwood, we've owned most of all those stocks that in the portfolios of my predecessor firm. That's it. We think that's a marked distinction and difference of so many firms. So that's really the root of our culture and how we think and act at Wedgwood is, again, classic Buffett. We wait for a fat pitch.